afternoon. Thanks for tuning in. You're watching Ask BQ on Bloomberg Quint Live. I'm Navneet Saluja D'Souza.
And I'm Alex Matthew. Well, this is the show that gets you answers to all your equity-related queries. But before we do that, we're actually going to turn to a management interview that we have lined up for you. In fact, we're talking about Tata Steel. In fact, they've had a steady fourth quarter that's been aided by a one-time gain. Let's get more details, Navneet, on this about the quarter gone by with TV Narendran, the MD and CEO of Tata Steel, who is also joining in. Also joining in on the show is Nikki Mirchandani from the research team, who's going to take the conversation forward. Nikki, I'm going to toss it to you.
Thank you, Alex. Hello and welcome to Bloomberg Quint, sir. A good set of numbers reported by the company. However, we've seen an exceptional gain of around 11,376 crore this time around on exceptional basis. On consolidated basis for this company, much of it is due to restructuring of UK pension scheme. I'd like to understand if these gains are one-time in nature.
Yeah, it is a one-time adjustment. Basically, what has happened with our pension in the UK is that we have shifted over from what was the original scheme to a new scheme, and the pensioners were given an option to either come to the new scheme or to go to the Public Provident Fund, the PPF. So 30% of the pensioners have chosen to go there. About 70% has decided to come with us to the new pension scheme, which has a slightly different structure and where the liabilities are a bit more limited in some sense of the term. So that allows us to recognize a surplus which is there. Part of this, most of the surplus is being recognized, which is a one-off. In some senses, it's a non-cash adjustment. It also has to be seen in the context of what we've done over the last few years, including last year, something like 550 million pounds was paid into the fund. So if you look at it over a period of time, over the last few years, we've taken many hits. This time it's a positive adjustment.
I'm going to talk a little bit about your European division, where you've registered an 88% uptick in terms of your EBITDA per ton at around $71 per ton. This seems to be a little lower than what the analysts were estimating, and also as compared to your peer in that region, ArcelorMittal.
So two parts to it. The first part is it's been better than the previous quarter because operationally we were better than Q3. Q3 was a bad quarter for various operational reasons. The second part of it is that in Europe, many of the long-term contracts are negotiated from January. So if you look at the automotive industry and some of the other industries, the negotiations of new contracts happened in January, and that gave us an uplift in terms of prices. So these are the two reasons why you saw a fairly material improvement in the margins in the Jan-March quarter compared to the previous quarter. But yes, it's a fact that we could have done better. We've not done as well as some of our peers because operationally we still had some problems, particularly in the UK. And in Netherlands as well, there were some issues and we had to sell more slabs than we would have normally done. So which pulled down the margins when you compare it to some of our peers. But it's for the reasons that I described better than the Q3 performance.
Also, though we have seen a growth coming in your volume division in Europe for European division, I'd like to understand why are we seeing a decline on year-on-year basis, and also if we can look at a further contraction in the volumes for your European division.
See, Europe is a mature economy, and so the focus is not so much on increasing volumes as improving the mix. So the whole focus in our European operation is to say that how can we get a better mix of the existing capacities. So in the past we've had higher volumes and we've disposed some assets. So the current volume level of about 3 million in UK and 7 million in Netherlands is kind of par for the course. So we expect to stay at that level and do all that we can to keep improving the mix, which will help us improve the margins. So volume growth is not going to be significant. It's going to be fairly stable at this level, and we're looking at how to enrich the mix within these volumes.
All right, reports suggest that steel producers, including you, have hiked the prices of HRC to in the range of around 750 to 1,000 per ton in the month of May. I'd like to understand if there are more price hikes in the offing, and also what kind of bearing or impact, positive impact it will have on the realization of the company in the upcoming quarter.
I think what happens in India will typically reflect what happens globally. The steel prices have been hovering in the $600 range for hot rolled coil over the last few months. It went up to that level during the October-December quarter, and January, February, March, it kind of reached that level. So to me, The prices in India are reflecting a little bit of what happened in the international markets, plus the fact that the economic activity in India has really perked up over the last few months. Some of the steel consuming sectors like automotive are doing quite well. Infrastructure is also starting to look up, so the steel demand is growing there as well. So we see the demand side situation is improving. We see globally prices at a more stable level. There are cost pressures which are particularly felt last quarter because the coking coal prices really shot up. That accounts for about 40% of the cost for any steel maker who uses coking coal. So to me, there were cost pressures, demand situation was more benign, and the world trade was a bit more balanced. Going forward, I see prices hovering around these levels, being range bound at these levels rather than significantly moving up or down.
Sure, the exit rate of the realization stood at around 49,000 per ton in terms of your realization for Q4 FY18. What kind of realizations can we expect through the course of FY19?
So what we said in the analyst call yesterday was that we expect this quarter to be about 2,000 rupees higher than the realizations of last quarter. Going forward, obviously there will be some seasonality impact in the July-September quarter, because that's when a lot of construction activity slows down because of the monsoons. But after that, things should pick up. So I think for the whole year, the steel prices will be range bound around the $600 level. Maybe $570 to $620 is the range that I would predict for hot rolled coil. The prices in India is also a function of the rupee. We should realize that 5 years back also the steel hot rolled coil prices were around $600, but at that time the rupee was 45 to a dollar. Today it is 67, and people are predicting even 70. So one needs to look at the rupee price in that context, because the dollar price may remain quite stable, but the rupee price will also be a function of the exchange rate, because for anyone who's using coking coal, all the coking coal is coming in, most of it is coming in from overseas, and the rupee, the exchange rate also impacts the cost for steel makers because of our dependence on imported coking coal.
While the sales volume growth registered 11% growth at 12.1 million ton for FY18, what is the kind of growth that we can look at for FY19 in that case?
The sales volume for the existing facilities largely depends on what we produce, because we are almost running full out at both Jamshedpur and Kalinganagar. So we have forecasted volume for the year in the 12.5 to 12.8 million range. Beyond that, obviously, we are limited by what we can produce. We are waiting to see what happens on Bhushan Steel. If that comes through, that's another 4 million tons which is added to what we can sell.
Alright, the net debt of the company has come down to 66,900 crore in FY18. I'd like to understand the quantum in FY17, and also what kind of further deleveraging can we expect for the ongoing financial year?
1st April last year, or end of last financial year, I'm talking of FY17, we were probably at around 75,000 crores of net debt. So we've come down to about 69,000 crores. So the net debt has come down. We have also refinanced a lot of our debts. So we are comfortable from a tenure point of view. 2-3 things, important events are ahead of us. One is the Bhushan Steel acquisition. Obviously, that will increase the net debt because we will use up a lot of the cash that we currently have with us. Plus, we will have to borrow another 16,000-17,000 crores from the banks, but that will lie on the Bhushan Steel balance sheet. But on a consolidated basis, it will reflect on us. But the other event is the JV with Thyssen, because 2.5 billion euros, about 20,000 crores of debt is supposed to move from the Tata Steel balance sheet to the JV balance sheet once we complete the transaction. So there are pluses and minuses. In the long term, we are obviously looking at keeping the net debt to EBITDA ratio at below 3. We are pretty close to that currently, but over the next year, things will go up, and then it will further reduce once the JV happens. And we are a capital intensive industry where the spending, particularly when it comes to inorganic growth, happens in big amounts in a short period of time. So there will be periods when it looks a bit stretched, but over a period of time, the objective is to bring it to below 3.
Alright, with the NCLT not coming in for Bhushan Steel, I'd like to understand what kind of EBITDA per ton or the margin that you are expecting from this insolvent asset?
So we will always benchmark Bhushan Steel EBITDA levels to the EBITDA levels of any other player who is buying raw materials from the market and obviously try to replicate that. So the minimum we are looking for is at least 10,000 rupees per ton of EBITDA, and I've seen that some of our peers have done better than that in the last quarter. So let's wait and see how we can also realize something similar.
All right, although we have seen some kind of hike coming in on the steel prices, but I'd like to understand how is the trend going forward on the cost pressures, especially the coking coal prices, which currently trade at around $181 per ton. Your guidance on those levels for FY19?
So the coking coal prices have continued to be very volatile because the market is not very liquid, and so it's very vulnerable to one-off events. So on the demand side, events keep making the prices volatile, and more importantly, supply side events as well, because more extreme weather patterns, particularly in Australia, really impact these prices. So, and very often in the November-December period, there's always a freak weather event in Australia. So this year also the coking coal prices started spiking up in anticipation of that. Many of us stocked up for that, but the weather was fairly calm, and so coking coal prices over the last 2 months have started dropping. But it can go up any time. It's dropped about $20–25 in the last month or so. Obviously, from a Tata Steel point of view, we will see higher coking coal costs in this quarter than we saw in the last quarter, because we are going to be using some of the more expensive coking coal that we bought in November, December, January. The next quarter, we will see coking coal costs come down, because the prices at which we're buying coking coal today is lower than what we bought 3 months back. So there's normally a lag of 3 months, because that typically we have 70 to 90 days of coking coal stocks, because most of the coking coal comes from Australia and we need to plan for that. So there's normally a 3-month price lag between the cost lag between the price of coking coal and the cost impact on Tata Steel in India.
All right, sir, thank you so much for your time. It was indeed a pleasure talking to you. 3 takeaways from this interview that I would suggest. Cost pressures are expected to escalate going forward in the upcoming quarter. We see the EBITDA per ton for Bhushan Steel at rupees 10,000, and European business operation is expected to improve. Back to you guys.
Thanks, Nikki, for that very interesting conversation with the management of Tata Steel. Remember, on the operating front, the numbers were good for the domestic business, but the stock is seeing some bit of profit booking in today's session. Staying on with the earnings season then, Z Media is trading with some bit of cuts in today's trading day after reporting weak set of numbers for the March quarter. In fact, with a 44% dip seen for the bottom line of the company. Let's find out what were the key factors that weighed on the quarter 4 earnings. Joining us on the show is the Chief Financial